Hi, good morning. You are watching the Short Vol Show live on YouTube. And, it's one of these days where we're kind of just recovering from what happened Friday. I don't know if any of you got kind of jammed up Friday, but I managed to sidestep everything in my trading account, although the 401k, of course, got kind of hit on a really just a ugly, ugly day on Friday for the markets. We'll see if it tries to mount a recovery here. The basic play, as far as I'm concerned, is to look for some sort of bounce of a little bit here as we move forward. I'm broadcasting to you later in the day than I usually come on. It is almost noon, and NASDAQ is currently down 150. Here's the chart of the NASDAQ today so far. So we're it looks like it's sort of holding the 12,460 area here, and we'll see if it's going to break on back through the downside of that or if we'll kind of hold here. As far as E-minis, down 25 now, off the lows as well. Like I said, it was real ugly Friday, and so kind of looking for a little bit of a bounce here if that's going to happen. Obviously, the sell-off due to the Jackson Hole comments of Jerome Powell, the Fed. Initially at 10 in the morning, he came on, and the market initially kind of rallied on Friday, but then as people sort of digested his comments, we sold off big, and it was ugly. It was real ugly. We are off the lows, right? The lows that we put in a couple months ago, I think we were something like 15% off the lows. You can see the NASDAQ low here on this chart of 11,068 back in like the second week in June. We're off those lows, and we had kind of a nice rally off those lows. But actually, just looking at this particular chart here, which is, I believe, a 3-year chart, it looks like we're kind of in a downtrend still, even with that little bit of a rally. But it's funny listening to people who are not really follow the markets really closely. People will say, well, I heard on the news that the market's going to rally tomorrow or it's going to sell off tomorrow. Nobody knows what's going to happen tomorrow. So when you heard on the news that that's going to happen, it's silly. And certainly we don't know what's going to happen going forward. However, it feels like the news wasn't so bad on Friday that this rally is just destined to continue forever. Or I'm sorry, the sell-off is destined to continue forever. It was the Dow down, I think, over 1,000 points Friday. So we will see where we move from here. Let's go to this is a 20-day chart, and you can just see really divot taken out of that, right? Boom. And we lost a lot of ground, all the ground we made in August, it looks like here. However, it doesn't feel like this is necessarily going to continue lower. It feels like we could grind sideways or get some sort of a little bit of a bounce. And certainly I've been playing for a little bit of a bounce. The position I had on Friday was I was long a little bit of a delta in Square. I bought some December calls. I bought the December 67 and 72 calls, and I sold some front week stuff against them just to kind of have a calendar on. Today, however, going in with the market kind of moving sideways, I bought a couple more calls, and it really hasn't worked out so far. The stock gave back since then. I was actually in the car on the highway. Hard place to monitor things, but I had that strong feeling of FOMO. I know you guys get that sometimes, the fear of missing out, where I was thinking, wow, the market's going to bounce back to and regain all the ground it lost Friday while I'm sitting in this car driving somewhere, and I can't miss out on that, so I better buy some calls. That was kind of my motivation. And it hasn't been terrible since then. The stocks are probably around 68 and change. Now it's 67.90, so it's not like the thing tanked by $20 since then. In fact, pretty much sideways action in Square since then, and that kind of mirrors the NASDAQ. As I was saying at the beginning of this video, we're kind of moving sideways off the lows currently in the NASDAQ as we follow the action today. You can see that to my right in the screen right there as it it's trying to rally. I always think of the markets as constantly people putting money in, right? There's people's 401ks, people's paychecks have all these automatic deposits. So in the absence of anything else happening, the market tends to rally. And another way of thinking about that is unless people are actively selling, as soon as people stop actively selling, the market tends to kind of rally back. And that's kind of the thought I have in my mind and why I'm sort of playing for a bounce. Now, if we look at Square, it's definitely off of the recent highs as well. We got all the way up to, I think, 95, almost 100, back to $100, but now it looks like we could possibly retest the lows. I think the low was something like 56. Oh no, 55.97 here, and you can see since the third week in June here, where we hit the low, it really was starting to put in some sort of a rally here, and at least you can say that we've had sideways action, right? So I believe that that is certainly likely to continue. That there's no real huge reason for us to just take out the lows here, especially since this thing came from 250. I have some friends who their average cost for shares of Square is like $200, right? So now down around 67, it feels like there's more upside than downside. And of course, in reality, there is, right? There's infinite upside and downside zero. So we'll kind of see where we go from here. Like I said, my sort of break even on this particular position, which I just bought some October 70 calls as I was on the highway a couple hours ago, and the break even's kind of about 68.50. Right now we're 68.11. It says we did get down to, I think the lowest was maybe 67.30, something like that. So kind of hanging in there. We're still with a shot here. If you look at my deltas, if I get out of the way real short for a second here, and you look at my Greeks, the delta right now long 400 deltas with 82 in theta. And what I was thinking about doing with this position was trying to get a nice little leg, maybe stock goes to like 69, and then sell some out of the money front month calls against this. So for example, right now we are net long 9 call. We're net long 6 calls, right? We're long 9 calls and we sold 3 against them. So we have a surplus of 6 calls that we can work with here. And the plan is to turn this into a calendar, but get a good leg on it. So for example, if we look at September, the front week calls, and something like the 71s or the 72, something like that, I did have an offer in to sell the 70s at $2. That kind of thing is what I'm looking for this. So for example, if we were to sell these 70 calls at $2, and we have a 6 to sell, how would that affect our Greek? So what I'm going to do is I'm going to go analyze trade, and so I don't know what this other trade is in here. Let's get rid of that. So if we were to something doesn't look right about this. Let's see, what is it? Six. Something doesn't look right about this. Anyway, oh, I know, it's centered at 82. That's why. So let's recenter this. Okay, so if we were to sell 6 of these calls, we could go from having a long delta of 400 to long 137. However, if you look, if we go up towards, if the stock rallies to 74, all of a sudden we're short delta. So we're playing for a bounce to the upside. We don't want to put ourselves in a position where it rallies, it does what we want to, and we end up losing money. So I wouldn't want to sell probably 6 calls. I want to sell less. The other thing to consider, the best way, I was taught that the best trade you can do against what we initially bought today were the October 70 calls. The best trade you can do against buying the October 70 calls is to sell the same calls out at a higher price, right? In this case, we're looking to put a calendar spread on. So maybe not sell 6 calls. Maybe what if we sold 5 calls? Now, if we sold 5 calls, even up at 75, we're only short 37 deltas, and we've got 1 call deficit. The other way of looking at this is what's the worst that can happen. If you look down here at the downside here, right? If we sell no calls, you can see the number at the downside here. And selling some calls certainly helps that, but doesn't help it a huge amount just because we're only collecting so much money for these calls. The really good thing about, and the thing I like about this position is that we have a lot of time on the calls I bought were October and December. So there's a lot of time for this stock to rally between now and expiration. So even if things go against us for a little bit, we've got time on our side. Yes, there's some theta for sure. Right now it's showing theta of $24 a day, right? So it's costing some, I don't know why it shows that because that doesn't make sense. Let's see. I guess we are collecting positive theta just because we happen to be short those front week calls, which is great. So we're actually collecting theta, and we really have time on our side because there's several weeks before these options expire. So, and my premise is certainly that the market is going to recover somewhat in the next couple months. So feel good about this position right at the moment. And of course, it would be a beautiful thing if the stock took off and rallied to 80. But in the meantime, we would certainly take $70, and certainly if we could get to back to 70 today, I would sell something against this position to kind of lock stuff in. You can see down a little money on the day so far, but that can certainly come back, and we've paired our losses a little bit for the moment. What I'm looking at when I'm looking at making decisions with this, I'm looking at the Dow Jones. I'm looking at NASDAQ now down 112. So NASDAQ, off the lows, trying to rally here. Same with the E-minis off the lows, trying to rally here. And that's kind of what I'm looking at. And this actual strategy overall is just kind of playing for a bounce in the market. And we're seeing a little bit of a bounce back in the market here. And if that continues, then this position will be successful. In the meantime, the fact that I did buy back months and sold this front week against it, even though I've only sold 3 calls in the front month, due to the fact that these calls decay so much more than the back month calls, we are actually in positive theta, which is a great thing. So time is on our side. If nothing else happens today, we will collect $25. So beautiful, right? Better than paying hundreds of dollars a day. And if we were to sell all 6 calls against the 6 calls we bought this morning, we would collect $200 a day, which would be nice as well. It's nice to have theta on your side. It gives you a little more wiggle room in life, right? And generally, it is kind of believed, people talk about the marketplace being efficient. Generally, it is believed that the prices of options, although efficient, are a little bit higher than they should be at all times. And the reason for that is there's less people either able or willing to sell options than there are able or willing to buy them, right? If you are a beginning trader or if you have a very small account, they're not going to let you sell options, right? And just that dynamic in itself makes the prices of options a little bit higher than maybe they should be in the most efficient marketplace. And I've always been what I would consider a natural premium seller. I prefer to be short premium and hanging out than to be long premium and looking for a move to occur. Now, some people are better trading to the long side, and I have had friends who essentially would be long a stock, long premium, and then if the market starts to go crash downwards, they might lose something on their delta being long, but they'd make up for it with being long volatility, being long Vega. And so they just kind of lean long, the market slowly rallies, and they make money on their delta, and if the market sells off, they make money on being long Vega. So that is a common strategy. And I was trying to adjust my strategy recently to take into account that the markets generally rally, especially due to the fact that we are, somewhat off the highs in the market. When we're making new all-time highs, I'm not interested in owning stocks in 401k or elsewise. But when we've had the market sell-off that we got earlier this year, it makes me much more eager to actually get long some of these stocks, right? I mean, Square, once again, way off the highs. The high was what? Let's look at it. 289. Right now we're trading 68, right? So to me, when it was 289, I had no interest in being long it, right? But 68 might have some interest. Let's look at some other ones. Now, I'm not talking about getting long this one, but Carvana got up to 376, right? Now it's 34. I thought it was crazy when it was up here, and I was trying, I was trying to short it at different spots here and not being very successful. But certainly, if I'd stuck with that idea, I eventually would have been successful, but I was not able to hold on. I mean, it got all the way up to 376, but really back down. And in this particular issue, just due to the fundamentals of the company, I don't think that this could never get back to 376 again, right? Because they're in a competitive space that what's it called? Bring a Trailer is sort of better than them in my opinion for high-end cars. And the whole gimmick of having the store with the elevator and multi-stories is just that, a gimmick in my mind. And like I said, it's a competitive industry. So really was a great short up there around 376, $34. I don't know how I feel about it. I think it could go either way. Anyway, I've been gabbing for a long time here today, so I'm going to let you go and go about your business. Next time, I promise there will be more VIX content as the Short Vol Show continues to ride forward. Thanks for checking in with me today, and I will see you very shortly. Let's see. There's Edward. What's up, Edward? Nice to see you. Hey, Brent Patterson. Would you mind pulling out the GME chart? Yeah, let's do that real quick. For Square, take a look at the 920.75 call. The 92.75 call. All right, so let's do that for Square. Volume. Yeah, someone traded 11,000 calls. Wow. So that is interesting, right? Let's take a little closer look at this trade. So I'm going to go to time and sales. And I'm going to isolate September. It's possible that this was like a recommendation from some website or something like that. Because look, it's a lot of little lots. If we just isolate the 75 call, and the way I'm doing this, there's this filter here. If we just isolate the 75 call in our time and sales here, we can really zoom in on the information that's interesting to us. Somewhat two-way paper, but it's got to be that some big website or some big person recommended these options, and it looks like they recommended to buy them. That's what I'm thinking. Somebody's looking for a pop. Do you ever go whale watching on the Cape? Yes, whale watching is very... I have never actually been whale watching myself, but it's very popular here, and I think they guarantee you a whale when you go whale watching. So there's that. All right, let me get back to this GME chart. And GME, I'm very biased when it comes to GME. So people are probably not going to be interested in what I have to say. But there's the GME chart right there. I'm going to look at my monitor here. All right, there's a GME chart right there. Kind of looks like it's in the middle of a channel there right now, right? Now, let's bear in mind that this stock is in several ETFs with other quote-unquote meme stocks, and AMC has gotten freaking hammered, as you know, in the last week or two. And I actually tried to I put a trade on AMC, which didn't work out at all. Essentially, I was buying the 9 straddle right after it made that big move down because I figured it would keep moving, and it just sat there as soon as I bought the straddle. And when I actually looked at the charts and my break-even points and stuff like that, I realized that it was a pretty expensive straddle. So I ended up bailing out of that position for a small loss. But yeah, GME, once again, I don't like the fundamentals of this company. I don't think that they've solved their problems. Although Ryan Cohen has made a ton of money, and some people have made money in GME, I see this as slowly bleeding to the downside. Now, I've been pretty wrong with it, though. It keeps getting these bursts of life, right? And so I'm very kind of happy that this move here, if we zoom in a little bit, this move here from June through August, the stock more than doubled, right? That's a big up move, obviously percentage-wise and otherwise, with this stock. And so I'm happy I wasn't shorted there because I would have got crushed, right? And playing to the short side on here kind of has to be selective because the stock has made some big up moves, which I don't really understand. And when I don't understand something, it makes me scared to trade it. So thoughts on the chart right now? It seems to be kind of in the middle of its current range. Long term, I would be short it, but I just don't really know what to do here. Maybe let's take a look at option pricing here. So it's showing around 120 vol, which sounds like a high vol, but you have to think about when this was a several $100 stock, the actual option premiums that represent were higher than they are now. When we just look at actually at the straddle, so for example, SEP9 straddle, you've got 11 days to go. So trading around $5, right? The 31.5 straddle. You also have all these weird strikes because of the split, but $5 with a week to go seems pretty reasonable to me, right? So nothing really sticks out in this stock to me as being like, oh my gosh, that's so cheap. Oh my gosh, that's so expensive. Oh, this seems kind of obvious that this is what should happen. Nothing really sticks out like that to me with this issue. Long term, I think stock's going lower, but if I was gonna short it, I would wait until we got another one of these like up moves to like 47 and then be like, whoa, yeah, or above 40. When a stock splits for a little while after it splits, you have in your mind, you keep doing the math in your mind. Oh, what would that represent pre-split, right? So a 4-to-1 split, you could say, okay, well, it's $30. What's 3 times 4 is, and do the math on that and think, oh, was that good versus whatever, or what was represented $200 in the stock. This stock, it's becoming sort of a different animal, I think, now that it's post-split, and I wouldn't be surprised if it just kind of slowed down more and more and more over time. But, this stock was great for me at the first part of the year, was a huge winner for me, and I pretty much ended up giving most of it back at some point just because it's moving around pretty unpredictably, and it doesn't really seem to follow the fundamentals of the company, which are, let's face it, not good. Loss of over $2 last earnings, lost 186 the ones before, and not a real cohesive plan in place. I don't believe that NFTs are the future for anybody, much less this company. And these buzzwords of crypto and blah blah blah, I don't see where GameStop has a comparative advantage over other companies in that. They, once again, need to transition from brick and mortar to a more of a digital footprint. But there's other companies out there that people already are involved with, like Steam, for example. All my digital stuff is on Steam. All my games are on Steam. And it's going to take something big for me to be like, oh, I'll just switch them all to GameStop, right? NFTs, I don't have spare money to spend like $2,000 on an ugly picture of a monkey. And it seems like the only reason people buy those things is they think they'll be able to flip it, right? And you hear these things online of, oh, I'm going to buy this NFT of this monkey, and then I'll make that as my avatar. Now, that's what really really rich computer programmers do with their spare money that they don't know what to do with. But I don't see NFTs as anything but a waste of money. And maybe I'm old school, but that's just the way I feel about it. And I'm certainly not going to get long a company because they're going to have an NFT platform that's going to compete with other companies. So that's kind of where I am with GME. I hope that helps. Thanks, guys, for watching. I've gone way too long today, but I appreciate you, and I'll see you in the next one. Till then, bye now.